evening. Welcome to Markets Today. I'm Lata Venkatesh. With me is Surabhi Upadhyay. Well, the bulls started the week with a bang, but the good cheer did not even last through the day. Bad news came in the form of the Greek stock markets crashing, some of the earnings disappointing, and therefore a wave of profit-taking overwhelming the bulls. We have to wait and see. Post-market, the IMD also announced that the monsoons are stuck to its guns, that the monsoons won't be all that good. And then, of course, we have the credit policy as well to tackle tomorrow. So it's a very young week yet.
Absolutely, and lots to go. Well, for now on the show, let's start with the headlines. Bulls dominate on the Lal Street but lose fire in the second half on earnings news and steep fall in Greek stock markets. The Nifty ends 10 points higher, just below the 8,550 mark. The Sensex gains about 0.25%. Banking stocks surge ahead of the RBI policy, with the PSU Bank Index up nearly 4%.
The mid-cap index gains 1%, outperforming blue chips as stocks like Suzlon and Sun TV continue to gain on good earnings. United Bank closes up 4% as bad loans remain contained in the quarter. JP Associates, Uflex, Alok Industries were some of the stocks that saw big gains. HCL Tech falls 6% as fourth quarter earnings miss the mark. Margins fall more than expected to 20.1%. Deal wins remain below expectations. Dollar revenue growth of 3.2% fails to arrest the slide. Passenger vehicles outshine two-wheelers in July. Maruti reports a 20% increase in total sales. Hero Motor sees an 8% drop. Bajaj, however, reports a 3% rise in sales. But again, TVS skids with a growth of under 2%. Total sales were flat for Tata Motors, but the pickup in heavy commercial vehicles continued with a 21% growth for Tata Motors. Well, those were some of the headlines that the market worried about, and here are the experts that we have lined up on the show for you. Andrew Holland of Ambit Investment Advisors joins in with his take on the markets. On our corporate radar, we have the management of HCL Technologies who talk about their quarterly earnings, and the management of Bajaj Auto to talk about their fairly decent July sales. Also, Adrian Watt, Managing Director of JP Morgan, will join in to give us his outlook on the global markets and India's place in it.
All right, so lots of opinion coming your way, but first let's get you the day's trading action. A sedate start to the new week as markets ended with marginal gains. Anuj Singhal is now here with the wrap of the day's highlights. Anuj.
Well, a good day for the market, you'll have to say, though the Nifty and the Sensex ended flat after trading in the green for a better part of the day. The market had a bit of a dichotomy today. On the large cap index, it was all about banking. The bank Nifty was outperforming, led by ICICI Bank. Even the PSU banks also participated. But really, the big reason today that the bulls would be happy was what was happening with the mid-cap side of the market. The mid-cap index and the Nifty Junior hitting new lifetime highs. So that really was the big talking point today. Let's talk about the stocks then. On top, the big Nifty gainers today, ICICI Bank led the market rally, 3.5% higher on that. ITC was up about 2%, and new lifetime high for Dr. Reddy's yet again, the stock up about 2%. It was all about banks. The PSU banks looked quite good today. In fact, SBI led from front there, up about 4%. Bank of Baroda as well was up 4%. And the third biggest one, PNB, was also up about close to 2.5%. Auto and ancillaries, as a sector, we saw big gains in that, not just in the index, but outside the index as well. But purely from the index, we had stocks like Maruti, Tata Motors, and Bosch. All of these were up about 1 to 2.5%. On the losing side, stock of the day today was HCL Tech. Ever since its numbers, that stock was down quite a bit, dragging the market down 6% in the process. And of course, we had HDFC Twins, which were also down about 1.5%. In the mid-caps then, big surge in high beta names, stocks like JP Associates, that was up 19%. Suzlon was up 11% after numbers, and Punj Lloyd, after reporting a big order, was up about 7.5%. Not just that, there were some other big gainers as well. Amara Raja Batteries, Canara Bank, Sun TV, big gains across a lot of mid-cap stocks. So that really was the story of the day. Tomorrow, of course, the first half is likely to be dominated by what happens with the RBI monetary policy, and we'll take the market action from there.
Yep, of course. Thanks a lot for that, Anuj. Today, actually, the market was more like a one-trick pony, especially the Nifty. It was only the public sector banks that did very well. And even in the mid-cap space, public sector banks dominated. If you think that the bank Nifty with a 0.9% gain or a 1% gain, did very well. Look at the PSU Bank Index. That's up 4%, which gives you a measure of the outperformance. The big banks, of course, Bank of Baroda, SBI, all of them, PNB, were up 4 or even more than 4%. But the gain was not restricted to them. Look at Indian Bank, 9.4%. Union Bank, 5.6%. Canada Bank, 5.4%. Even United Bank, with 9.25% bad loans, was up simply because things had not gotten worse. So that stock was up 4.25%. It's a little scary. One is trying to read too much into the fact that these banks are going to get capital, but that's not the end of their sorrow. There also is some good news that the fiscal deficit numbers on Friday indicated that the government is spending a little more than it did over the same period last year, the first quarter. But all this is not enough to remove some deep blotches of red ink on the asset book of these banks. So I would worry a little about the texture of this rally. Not just that, Anuj referred to the JP twins also rising. So the quality of this rally was not altogether very reliable. Didn't give you a sense that it is here to last.
Okay, that's a word of caution on the markets. But now let's get you some opinion as well. Andrew Holland, CEO of Ambit Investment Advisors, has an 11,000 target for the Nifty by December 2016. And Manishi Ray Chaudhary, Asia Pacific strategist at BNP Paribas, has set his sights on 30,000 levels for the Sensex.
We're still, have an index target for December 2016 for Nifty of 11,000. So, yeah, that's a good 30% increase from here. Still think we're in that 8,000 to 8,500 kind of trading range for the time being. Nothing really to take India, down towards 8,000 apart from global factors. So I think that's where we are at the moment. But the volatility is going to be, quite painful, and I think that's what I'm just concerned about in the very short term.
We remain positive on India as a consequence of what's happening in the outside world, and we remain overweight in our Asian model portfolio on India. We have a Sensex target of 30,300 by the end of this calendar year, which is end of 2015, which is approximately about 8 to 10% from the present levels over a span of about 5 months. So if you extrapolate that, I would think over a 1 year time frame, the Indian market should easily give about 15 to 20% return to the investors.
Okay, now for the big earnings. HCL Technologies disappointed the street for the second straight quarter. Kritika Saxena, who did all the number crunching, is joining us with more. Kritika.
Well, if you purely look at the top line, it's in line with expectations. So dollar revenue up by 3.2%, constant currency growth is coming at 2.9%, and rupee revenue up by 5.5%. On these counters, yes, in line, but it's a miss when it comes to PAT and margins. We're expecting a growth of around 8% at the back of higher forex gains. Forex gains haven't been as significant as what the street was expecting, and hence the growth on PAT is 5.9%. Now, margins is a big miss. We are expecting margins to come in at least between 21 to 22%, while the management says that is the band that they will be able to maintain throughout FY16. Margins for this quarter have come in lower at about 20.1%. Major reasons for this is an upfront visa cost that hit in this particular quarter, increased investment in innovation labs and digitalization, in reskilling and hiring employees, and increased SG&A expenses. Now, this is expected to continue throughout FY16, so margins will remain under pressure, investments will continue, and only by FY17 will we see some kind of recovery over there. Some more pain in terms of engineering services. That's gone up by about 1.9%, lower than what the street was hoping for, but that is expected to pick up by the second half of FY16. Infrastructure services has come in fairly decent in terms of the overall growth at 5.2%, but then has been offset by the geography mix that you see. So Europe is fairly flat, but that's a seasonal impact, and manufacturing also not as good as you were expected. So all in all, it's a fairly weakish quarter, largely at the back of the fact that HCL Tech is preparing to invest heavily and grow the overall basic base that they're seeing across industries. But yes, the overall deal win has come in at about $1 billion. That the street has taken some amount of heart from the fact that at least the deal momentum has been strong this quarter.
Be in a guided range of 21 to 22 for the full fiscal. So we will focus on delivering the margin within that range, right? So there will be some engagements which will deliver in one quarter, some will move in the second quarter, and so on. But I think from a full fiscal perspective, we believe that we should be able to execute to that, the range that we've talked about.
Okay, now we stick with the big corporate numbers. The revival seen in the commercial vehicle segment has augured well for Bharat Forge. That company's revenues have grown by more than 14%, and the fresh new orders in the automotive space, especially from the Asia-Pacific region and Latin America, has helped exports grow by more than 20%. What's more promising is the fact that the management is confident of the automotive segment showing some further uptick in the present quarter itself. Listen.
The guidance that we have given on margin is we expect it to be somewhere in the region of 29 to 30%. I think in the last quarter we have had some tailwinds in terms of inflation, commodity prices, etc. And also I think we have done very well on productivity and efficiencies in our manufacturing operations. So everything has kind of come together, and that's why the margins are looking a little high. But yeah, going forward, I think that's the range. 29 to 30% is what we see our margins coming at.
India's auto industry is still struggling to find some traction even in July. The sales figure in July have thrown up quite a mixed bag. The largest car maker, Maruti, has posted healthy growth, but that's largely thanks to the base effect. Passenger car sales have risen nearly 26%, taking the overall growth to 20% so far in the year. Tata Motors is showing some improvement, while total sales has grown by just 1%. Passenger car sales has risen by 27%, thanks to, of course, new launches like Bolt, Zest and the new Nano. But light commercial vehicle sales plunged 21%. M&M also in the slow lane. Auto sales saw a 6% dip, and the company's bread and butter tractor sales declined by 11%. And it's not a rosy picture for most of the two-wheeler makers. Bajaj Auto, of course, was the exception. It posted a 3% rise. This is relatively a better performance in a slow market. Hero Motors saw its sales slump by 8%. TVS Motors also disappointed with just a sales growth of 2%. Well, let's hear out what some of the managements, that of Bajaj Auto, had to say.
This time the Diwali is a bit later, and so the festive is a bit later. So you will find August, maybe the industry is down, but still we are able to do well. And September, October, things should kick in better for us. We should close maybe close to about 20-21% type of a market share somewhere in October.
All right, time for a break now, but coming up on the other side, Sudarshan Sukhani will be joining in for a technical chat. We'll also tell you what to expect from the RBI credit policy tomorrow.